folks. This live stream is brought to you by my sponsor AAA FX. Now, they're a fully regulated broker in Europe and South Africa, offering Forex, indices, commodities, crypto, and over 100 stocks. Now, at AAA FX, you pay no commission on any Forex pair using their ECN Plus account and low commissions on cryptos and stocks. Plus, you can deposit with cash or crypto, get a free VPS with deposits over 5K, and easily integrate the well-known copy trade service Zulu Trade. While you're waiting for the stream to start, go and check them out by clicking the link in the description, comments, or visit AAAFX.com.
Hello. Welcome back, everyone, to Trading Nut YouTube Live. We're going to be looking at the market over here in the New York session. So New York session is about to kick off very, very soon. I hope you guys are doing well. Diego, how you doing?
Doing fantastic. Yeah, can't ready to trade. Amazing. Okay, we've got Phyllis in the building. Yeah, first to like, I'm ready to earn. I like that. Aussie. Fantastic.
Looks like Phyllis has been part of our live streams before. Catching those sniper entries. Just want to introduce ourselves. My name's Rodrigo. This is Diego. We are business partners and we are the bank level traders. So we use smart money concepts, Elliott Wave, and we use Wyckoff in order to filter out the best order blocks and catching those high risk reward trades. So today, fingers crossed, we get one of those entries. Let me just fix up my mic. I just realized it was like pointing down there. So the sound should be a little bit better. So whilst we start setting things up, let us know in the chat where you're from. Where are you tuning in from? Where are you trading from? What country are you representing? Yeah, my mic's good.
Yeah, and also everyone, we want to know what's your goals in trading. Do you just want to trade and make money, or is there something deeper than that? What are you guys actually doing? Are you training? Are you funding your accounts? Are you doing prop challenges? How are you doing? Are you currently profitable, or are you literally here in Trading Nut to follow forecast signals, or are you actually learning? I'd like to know what you guys are actually doing. What is your intentions? I'd just like to know a perspective from you guys, the viewers.
For me personally, my main goal in trading is follow my trading plan. Like this is like
simple.
For me,
it's easier said than done.
Yeah.
It sounds so easy, but it takes years to actually do it and to actually find a trading plan that actually works. It's not easy at all.
I find that when it comes to discipline, you got to do things outside of trading in order to build that discipline muscle. And that discipline muscle is what's going to give you the consistency. Yeah. So for me, what builds up my discipline is getting up at 5 a.m., doing my morning routine, and being in the gym by 6. I got 2 friends of mine that I meet up Monday to Friday at 6 a.m. on the dot at the gym. So I don't want to be the one not turning up. I don't want to be the one letting down the team. And so we've got a fixed program that we follow. So if you miss one day, man, it's like you don't want to let the others down. So that's one way I build discipline is using accountability of people that I know, people that
that's so key. Like when you go gym with somebody, you just cannot miss. It's like guy code, there's bro code. You cannot miss the gym session. Like, when you do it yourself, you might just be, you know what, I'm gonna go to gym in 3-4 hours because I can, or I'm gonna skip it today. But the moment you've set a date, you've got a routine, you just don't miss a gym session. It's guy code. You just can't. Like when me and Rod used to go gym in the morning when we were working at the trading floor, we never miss a gym session. whether it was in the morning or the evening, we were so consistent. Well, it's because we got each other, right? It's the same with trading. If you've got like a team around you and you're accountable for everything, then obviously it's just going to help you trading, of course.
Yeah. And another way to that I personally use to build my own discipline is by controlling what I eat. So what I've done all different types of diets, and the one that's most powerful, I guess, more effective for me is time restricted eating. So I give myself an 8 hour window, or like an 8 to 6 hour window where I eat. The rest of the time, it's just fluids, either water, teas, and black coffees. That has been for me. And during that eating window, I pretty much eat wherever I want. But because I'm eating within a small window, my stomach isn't that big. I can eat small meals and it's enough to power me through. So, and I found that if you can be disciplined outside of trading with your body, that's going to help you build discipline with your mind. Because I work from home, I walk past my kitchen. Now, if it's not my time to eat, I don't eat. So it's just like the market. So if I see a potential setup, but it's not in line with my trading plan, I don't take the trade. And so every single day you have to build this and exercise this muscle of discipline. So make sure you write that down. Someone type it in the chat. Practice discipline every single day. It's the only way. Even on the weekends, there's no days off from discipline. Got to get it done, and that's how you're able to then build the discipline in following a trading plan. Because I'll tell you what, man, like there's days when, like this week, it was at -5 degrees. My car was frozen, and I had every excuse to go back to bed. It's like 10 to 6, and what did I do? Still went to the gym. And my boys were there, So imagine being the one left, the odd one out. I'm too proud.
I know the feeling.
So let's start hitting the charts. Diego, I do want to see your DXY analysis to see how we can use that analysis in order to determine the next move for indices. So I'll cover indices when you're done with DXY.
Okay. What's the current bias for the indices at the moment? Have you got one yet? Markets are a bit choppy today, to be honest.
Yeah, a little bit. I'm pretty bearish, to be honest.
Okay, cool.
Yeah, so I do want to look for a short setup. So let's see if we can get one up.
Nice.
Just want to see what you think on the dollar. See what's going on.
Yeah, the dollar's a little bit. It's one of those days. Let's see. All right, can you see?
Yeah, that's good.
Okay, brilliant. Okay, so with the dollar, what is happening with the dollar at the moment? It's not really showing any clear signs. There's break of structures, etc. As you can see, I do have some points of interest. I'm actually bearish on the dollar. However, the way the market has dropped from the point of interest, which was this imbalance that I've had this since the other day, as well as, it's made a completely new low on the H4. I'm expecting the dollar to drop mainly because of the confluences that I've got here and the larger Elliott waves that's currently in play. So I'm actually bearish on the dollar. The only thing that's a little bit worrying, not worrying, it's not really building up a case study for me to be confident with selling the dollar. It's the nature of the candlesticks. It's really choppy, quite descending. There is a bullish flag here, right? But this might trick everyone, right? Many traders are just, it's quite normal. You might see this as a bullish flag, which, yes, it is a bullish flag 100%, meaning this may completely invalidate my bearish bias, right? We've got bullish momentum, we've got a break of structure, and then we've got deceleration. And then so essentially you're expecting a rally to the upside, which is fine. That's one of the plans, and we will take that. We will capitalize that if we get confirmation. However, the market has shifted and it's turned, and many people don't look at these details and just think, okay, there's bullish momentum, it's going to go up. No, even though there's a pattern here confirming this current bias, you need to be a little bit careful, right? And the reason I say that is because the market has shifted a little bit. So let's take it candle by candle. Lots of bullish momentum. Number one, the buyers have lost steam, right? They lost steam over here. There's no more confidence. There's no more volume. Number two, if we zoom in just a little bit more, what can we see? Now the sellers are taking control. There's compression. There's momentum, compression. There is now bearish momentum again, and now there's compression. There's a range. There's equal highs. So I'm expecting a bit of a stop hunt, and then a rally to the downside, depending on how this happens. If we do get a spike, fantastic. If we get a pattern, fantastic. But obviously, if this range breaks out to the upside of bullish momentum, then I've already got these scenarios played out, right? There's multiple points of interest, lower time frame imbalance, bigger time frame imbalance, a lower time frame banker block. There's a multi-liquidity pool here. This is where I'll personally be looking at shorts, but again, wait for confirmation in the event that obviously this could actually rally. And if it does rally, guess what? We'll still catch that, because we'll see, okay, there's a range here from this high to this low. If we do get something crazy like a big bullish momentum, it's not the end of the world. We just catch the pullback with confirmation and then we buy it, right? So that's my current game plan. Bullish and bearish, but I'm favoriting the shorts at the moment because of the price action. When the market dropped to the downside and then it dropped down here, I was expecting a rally to the upside. It was inevitable. It's like a magnet. When it makes a new low, you're expecting this point of interest to get filled, especially because of the break of structure. Look at this break of structure and that high. It broke structure, but it hasn't retested the point of interest. So when the market did reverse the other day and everyone's thinking it's the reversal and the dollar's going to make new highs, not necessarily. It's just a pullback. It's just part of the schematics. It's part of the plan. And now we did get there. We got there pretty fast, right? So this is what I'm personally expecting. If we zoom out onto the H4, again, the H4, we still need to be careful. It hasn't completed the full structure. We do have 1, 2, 3, 4. I am expecting one more move to the downside to complete this point of interest that I've had it for weeks. It's been there for a while. But anyway, doesn't have to go there. That is my personal game plan at the moment. And unless and if I do see some bullish structure, bullish momentum, I'm catching a pullback and then I'm looking to buy it. I've got that probabilistic mindset. I'm not going to be stubborn with having one bias. I'm so flexible. If the market shows me confirmation, I'll be buying the market, right? And if we zoom into what happened here, the dollar likes to complete full moves. Look, 1, 2, 3, 4, 5. This was a YouTube forecast that I did last week. Played up to the absolute T. I'm expecting the same thing, but on a bigger pattern to go long. So I'm definitely more bearish than I am bullish. If we zoom out to the daily, we do have this potential third tap fake out. 1, 2, and now we've got the third tap fake out. So what do you think is happening? All these traders or everyone assuming that this trend line is credible, they're going to be thinking, okay, guess what? A trend line that's been climbing up for so long, eventually it drops, break, retest, continuation. That's where you get taught in the textbooks. But what we teach is that if there's a 1 tap, a 2 tap, and if there's a third tap with a pattern, a bullish pattern, we're thinking the opposite. We're thinking this is a fake out for the trendline traders and we're expecting a big rally to the upside. So many confluences for the dollar to go long, but I do believe we still are yet to retest sort of these points of interest below the significant low, right? Look at this crazy momentum. This has been filled. All of this momentum here has already been filled. As you can see, multiple areas, there's some spikes. So yes, it can go long, but I am definitely also prepared for a short and then a long. Either way, by the end of next month, I'm very, very confident that the dollar it's going to be quite bullish. I'm expecting this to get filled at least on a bare minimum. So that's a dollar. That's my game plan. Get your notebook out, have your trading plan ready, and execute if there's a trade for you, if it fits your rules. So that's the dollar and the euro. Or actually, Rod, do you want to go over the indices, or do you want me to cover the euro?
Yeah, continue with the euro because it's related to
Fantastic.
the DXY.
Okay, fantastic. So with the euro, again, I am expecting further downside on the dollar, meaning it's going to push the. What's this over here? I just ignore these zones. Hold on. Let's keep it at that. So clear channel, as you can see, right? Clear channel. You can just see the clear channel over here. Structure, expecting a rally to the upside. However, the euro is also telling you two different biases. I mean, yes, it's within a bullish point of interest. And yes, there is bearish momentum. It's now pulled back. And notice the way it rallied to the upside, right? Look at the H1, right? The euro was not reversing yesterday. It was just pulling back to a point of interest. Look, compression, accumulation, one strong bullish candlestick. That's all it was. One strong bullish candlestick. And then after that, on the H1, the candlesticks got smaller and smaller and smaller, showing bigger and bigger wicks, meaning they're shifting the sentiment. And now the bears are coming back into town. So now I'm expecting a short-term bearish move towards minimum this point of interest and the potential longs. Also, plan B would be when the US session opens, perhaps a stop hunt of this area and then a short, right? All depends on confirmation. It all depends on price action, right? So that's the euro at the moment. You can see it's just hovering around this point of interest. This trend line is going to be updated multiple times. So I'm just separating it until it actually becomes valid. But my personal game plan, I would like to see the euro come up to these areas towards 1.08500 and potentially 1.08750 max. These 2 points of interest. This banker block, I'm going to delete it now. And I'll tell you why I delete it. A lot of traders will keep this banker block or order block, whatever you want to call it. And you'll probably get tagged in and then tagged out. And the reason for that is because this banker block is now no longer in confluence with a pattern, right? So I'm expecting a rally to the upside. We're only trading boomerangs, which is the fake out of the pattern, right? And then we get involved. So this particular banker block, I'm going to delete it because it's not in confluence with a BOT pattern anymore. But these two levels are. So that's my current game plan. And if we do get some price action, I'm looking for buys on the euro at either plan A or potentially plan B over here around these areas, right? So either way, I'm bullish on a dollar. If I get confirmation towards minimum this area and potentially this area up here, that's my current game plan. And if we zoom out, look to the left, there's multiple confluences, equal highs, bank level, liquidity pool, etc., etc. Just maybe I'm going too fast for you guys, but just take a mental picture, right? And also what we need to take into consideration, the reason I'm definitely waiting for confirmation is if I'm looking for buys around here or buys around here, around these sort of structure points, right, I need to be careful because we do have bearish momentum. We have a retest, potential second retest around here. And if there's bearish momentum here, I'm not going to say a limit order because we do have a bearish pattern, right? So for me to take a buy limit here is gambling. This is why I need to wait for confirmation. So just bear that in mind. Don't just set buy limits and sell limits blindly. Just also build a case study. If, however, there was a descending pattern now approaching one of my points of interest, that's a different story. Then I'll definitely be setting a buy limit, right? But this is why we wait for confirmation. On the lower time frames, you want to wait for a break of structure. You need to wait for confirmation. It's going to improve your win rate, honestly. So yeah, that's the euro. Dollar CAD. I do really do like dollar CAD as well. I'm definitely in sync with it. It's quite clear what's happening. If we zoom out, we do have some equal lows. So I'm expecting this to get filled any moment, sometime next week or whatever. We do have this current pattern. It's quite clear. Also, the characteristics of the dollar CAD, it does like to break a trend line and break out with momentum. So I'm expecting a breakout of this trend line and momentum to the downside unless we get further confirmation. This is more or less a plan A. We may get a spike on the lower time frame and then we could drop to the downside. So dollar CAD looks pretty decent. But at the moment, this just looks like it's accumulating and it's just building into a new pattern. So I would like to see something like this, just clear structure and maybe something like this, right? I need to see a clear pattern. If there's no clear patterns, no BOT patterns, then I'm not going to be trading it. So I'm still waiting for it to form a BOT pattern. And if we look to the left, this massive bearish momentum, these new lows were caused by the points of interest, so whether it's a banker block, a liquidity pool, head and shoulder, etc. So it's looking pretty decent. Let me look at Euro quick because I am trading today. If there is a trade, Rod can cover it in trading view. I'll have to just log out and just get into the zone. Okay, so it's just messing around. Dollar CAD. So it looks like we may get some short-term dollar strength at the moment, which is expected. I am expecting it to rally. Dollar yen. Dollar yen, I'm not really in the zone with it. Price action is not that clear. You know, when the markets are not clear, honestly, it takes me 1 second to decide I'm not going to spend my time even analyzing or even looking for a setup. It's too much mental calories, wasting my time, and it just looks low probability. Whereas a trade like dollar CAD, it's crystal clear. It's quite easy for me to analyze. Dollar CAD, yes, there's going to be a setup, but it just looks it's not screaming at me, right? This is quite interesting. I'm pretty sure I covered these areas for you guys last week and also this banker block. So try and replay that back just so you can learn why I had this banker block and these points of interest here and pinpoint rejection. So I'll definitely recommend take like 5-10 minutes to yourself and just rewatch the previous Trading Up live streams or the YouTube live streams that we do, because these levels were covered. Now, Aussie. So just to recap, dollar yen, I'm not going to be trading it for a while. Aussie looks okay. It looks pretty decent. In fact, I covered this particular entry live with the BOT members yesterday. So well done if anyone caught this. It was crystal clear. Textbook setup, 1, 2, 3, confirmation, lower time from entry. This is a 20-hour trade. So only the BOT members had access to that. And now I'm expecting something similar. As you can see, we also have a bit of a compression, but to the downside to wipe out these equal lows and a liquidity pool or an imbalance below before we rally price up to minimum this banker block here, minimum. And let's actually just map this out. This would be a good little point of interest. And we do have, potential buys. So Aussie is looking pretty decent. Looks pretty decent. Dollar yen, it's a mess. So I'm just going to move it down to 4th. Dollar CAD looks pretty decent. I do like dollar CAD, and I do prefer dollar CAD than AUD USD, mainly because Aussie just has two confluences, equal lows and compression, whereas dollar CAD has equal highs, a pattern has yet to develop, and also the larger parallel channel and a potential QM. So that's dollar CAD. Euro, it needs time to develop. I want to see a descending pattern. Or perhaps if it rallies to the upside, if I see some confirmation here, this feels like a good trade. So it's between dollar CAD and the euro for me personally today. One of those two, Aussie and dollar yen, it's not the best, especially dollar yen. It looks terrible today. So yeah, that's my forecast for today.
Lovely. So we are about 30 minutes away from, yeah, guys, we're about 30 minutes away from the open, New York Session Open. So let me know in the chat a couple of things. I want to make it a little bit interactive with you guys. So firstly, type in the chat the number one thing that you are struggling with as a trader. So I want to cover this because so many traders I've been speaking to, they don't really have anybody to share this with. And you know, I've been coaching and mentoring traders for quite some time now, and what I found is that a lot of traders, they have these issues, but they keep it to themselves. They try to figure it out themselves, and you know, sometimes you're successful with it, but I think it's important to have some ownership, some responsibility, and also some bravery. Let me know what you guys are struggling with, and we can cover some solutions to that, some very quick solutions. And then after that, we can cover some indices. So let me know in the chat what you guys are thinking, because what you guys are struggling with. And then we'll move on to the next one. We'll start with Diego. What are you struggling with at the moment?
I'm not making 100 grand a day. Like that's
That's a funny one. What would you say is one of your struggles as a trader?
One of my struggles. It's a hard one to say because it comes in phases. It does come in phases. Sometimes I struggle with something, I saw it, and then sometimes then that struggle doesn't come back for a while, and then I get a new struggle. But essentially, it's probably sometimes it's deciding whether I'm going to be aggressive or conservative with a trade. So sometimes I like to build a buffer, then I can be more aggressive with trades. And then there's times where it's a new week, I don't have time to build a buffer. You know, I've got no profits for the new week, and there's a trade where I should be doing an aggressive trade, for example, as in a really tight stop loss and aim for 5 to 10R, maybe 20R. But because I don't have a buffer, right, then I'm like, oh, you know what? I'm not going to do that. I need to be conservative at the start. So it's just finding that balance. I think that's probably one of the issues I'm struggling with. Anything else would be, yes, I'll be honest with you guys. Lately is the trading journal. So this week was it last week? No, this week was the first week where I've actually been doing my full process, gym, sleep, etc. The first 2-3 weeks of the month, I wasn't really in the zone. I was working with too many stuff. I was not trading. The markets were terrible. I wasn't trading. So last week I took a trade. I journaled it fine. But then this week I set a limit order and I never followed the trading journal process. Right, I never done the actual checklist, even though I told my members and the BLT members, guys, you need to have a checklist. You need to have a checklist. Yeah, I'm not doing it myself, so I'm quite guilty for that. But that was because it was a bit of a clear checklist. But at the same time, I need to get back into the habit. But honestly, it's been probably 3-4 months that I haven't been journaling and trading in the zone full time, etc. I've been working on so many other stuff. So I think those are the two current struggles.
No, I appreciate you sharing that. Those are some tough ones. But in regards to your first struggle, which was knowing when to, or being comfortable and have conviction with either being aggressive or being conservative, right? So I would say this relies too much on discretion, and it relies too much on your current mental state. So as opposed to perhaps maybe not define it as aggressive or conservative, because when you define it as aggressive, it triggers a defensive. It triggers defense. So when you say aggressive, especially in trading, you think, "Bro, I got to be more careful here." It's a bit, my stop loss is usually 20 pips. Now it's 10 pips. I got to be really focused. And you know what? I don't really feel up for it this week. I don't really have the buffer. And then you come up with all these excuses to protect yourself. So this cognitive bias is referred to as loss aversion. So because you have this definition of aggression and being conservative, you're going to make it very difficult for you to be aggressive when you need to be aggressive.
100%.
Yeah, because you want to protect and preserve the capital. You don't want to blow your funded accounts. So what I would advise you is you need to, instead of calling it aggressive and conservative, just call it entry 1, entry 2, and have a clear defined rules for each one. Now, if it's related, because we're talking about risk management, so entry 1 has a specific rule for how your average stop loss. So if you're usually using an M15 structure high for stop loss, and on your conservative entry, then your aggressive entry is an M1, an M1 entry, right? Obviously, it's going to be a tighter stop. So I think you just need to redefine what aggressive and conservative is, and just call it an entry, right? Just changing that could avoid that sort of loss aversion in your,
couldn't agree more about
mechanism.
I think it's a key point. Definitely, instead of saying conservative, say M5 breaker structure confirmation and M1. That's it. See, these 1% tweaks, guys. We just showed an example of how you can just change the way you look at the markets, and it'll have a huge impact in your in your psychology.
It's a lot of our decisions, especially something like loss aversion, which we've identified. It comes from a subconscious emotional trigger, right? So what you need to do is you need to just switch the perspective. So it's no longer aggressive. It's just entry 1. It's just M5. That's it. It's the language that we use can influence our emotions, and so it's and that would be the best advice. And the other advice when it comes to your being more regular with your trading journal, obviously you've got multiple projects, you're multitasking. So if you're gonna, if you want more consistency with your trading journal, then it's as simple as setting a set time every single day where you do that, and getting someone like myself, because I know you tag me on your journal, and you commit to it. You say, right, I'm gonna do my training journal at this time every day, and I'm going to tag Rodrigo on it. So make sure that you got that accountability. So guys, if you don't have, it's really good idea to, find yourself a mentor or a trading buddy, and do these kind of things with each other, because that's what Diego and I've been doing for the past 10 years. And it has worked amazingly well when it comes to performance and these little 1% tweaks. So let's go into the chat, because I see some. Yeah, go on. Sorry.
I was going to say, just honestly, guys, if you've got somebody to talk to, regardless of who they are, trading buddy or mentor, just to summarize what Rod said, is really important, guys. It's you just hold each other accountable, give each other advice, notes, and a mini task that you can give each other for sure. Yeah, go on. You can pick one of the questions.
So,
is there anything that you're currently struggling with, Rod?
Quite a few things, but I want to go into some of the viewers, because they've been waiting patiently. Okay. So I see here from Kimura, he said identifying true supply and demand zones. So this is more of a tactical issue, right? This is, and I'm sure this is causing you a lot of frustration, right? Because which one do you trust? What supply zone is valid? What, at the end of the day, we never really know. All we know is probability. So you need to have a system that can filter out, or some sort of indicator pattern, something that would filter out the best supply and demand zones, right? So what we do in bank level trading is we use wedge patterns in order to filter out the best banker blocks. Now there's a way that we do our wedges. There's specific rules to it, which is a bit out of the scope of this live stream. That's something that we teach on the course, but in order to really do that, you need to have a system that will identify the best zones, and you need to backtest it. That's the simple sort of answer to that one. I hope that helps. Guys, if you're finding this if you're finding this stuff valuable, then smash that like button, show us some love. Go on, Diego.
Yeah.
What were you gonna say?
Whether it's up there or down there, I don't know where the like button is. Just make sure you like it, guys. Also, just to summarize, this can be for any strat. Wait, hold on a minute. Wrong one. Where was the supply demand? Yeah, this could be for any strategy. Which one is a true one? You honestly need to categorize every single supply and demand level and find out why. Just categorize it. You need to really backtest it, right? This could be called whatever way you categorize it. You need to honestly backtest and get the results from it, right? And there's going to be a reason for them reacting a certain way, whether it's compression within the supply demand area, whether there's a fake out, whether there's a break of structure, whether there's 2 taps and then it rallies, maybe 1 tap, maybe it retests the area after a week. I don't know. You need to find the data, and then you can start building a case study towards it.
Nice. So we got another one from Andrea. So deciding which time frame to operate in. I tried different ones and I confused myself. Yeah, this is a very, very common issue, and it's very easy to get lost on the lower time frames. And so the best thing to do is I've actually made a video on multi-time frame analysis on the CTI YouTube channel. So if anyone can find it and share the link, that would be amazing. If not, I'll share one in a minute. I think I know where the link is. So essentially what you want to do is you need to, when it comes to multi-time frame analysis, first thing of all, you need to think about your current circumstances. Are you working full time? Are you studying? Like, you need to know your schedule. So if you have a small window to trade because you're working full time, then you got to go for the higher time frames, right? Because then you have more time to actually execute and analyze. However, if you've got more time in your hands and you're available, let's say during the New York session, like right now, then perhaps maybe you can do some day trading. If that's the case, then you want to be looking at the daily time frame. So you want to see where the liquidity is on the daily. H4, you want to look for where all the discount and premium zones are, and then you want to execute either on the 15-minute or the 5-minute. Right. So that was the daily H4, and you want to, and one more to execute on. You know, that's an example if you want to be doing day trading. Now, if you've got a small window of time and you're working full time, then you want to swing trade. I would recommend looking at the weekly, the daily, and you execute either on the H4 or the H1. So you pretty much want to be looking at about 4 time frames, and have a notepad or on the chart where you have the daily bias. The bias for each time frame. Now, some of the best trades that I've taken is when my lower time frame bias is in line with the higher time frame bias. That's when I tend to find some really, really nice, powerful, impulsive moves away from, away from some compression. So a breakout of compression. That's pretty much what the BLT is, isn't it? We're looking for compression before the expansion. that's kind of what we're looking for. So I think,
Absolutely.
wow, everyone's posting
There's
quite a lot
another
here.
question. Hold on. Wait, another struggle. Another struggle is trying to see past the fool's marketing comment who make trading seem like an easy thing. Yes, this could be a trap. My advice would be to join the communities and ask for feedback from the students. Forget the fact that they're saying we can give this, we can guarantee you this, or these are our results. Don't trust results. Listen to their audiences. What results are they getting? Just forget about the mentors and whatnot. Just literally spend a week or two just analyzing and studying the community if it's free, and just ask for feedback. That's probably the best advice I'll get. And if you get good feedback from the students, you'll be able to find a good course and a good mentorship, which obviously you said it's hard.
Yeah, 100%. So next one is, a problem I have is managing my risk at 1%, but seeing that my stop loss needs to be below a demand or supply for the entry, which exceeds 1% risk. How do I take the trade knowing I must risk more? This is as simple as using a risk calculator. So no matter how big your stop loss is, you should always be risking the same percentage. It's that simple, right? Get yourself a calculator.
Go on myethicsbook.com.
Yeah.
You can have
Get yourself a calculator and let the calculator calculate how many lots you should be doing. So you need, your lot sizes should change based upon the size of the stop loss and your account balance. So the calculator will tell you that. That's the answer to that, my friend. Very, very simple.
Even if the low is, or the supply demand level, whatever, even if it's 10 pips or 500 pips, the calculator should always tell you it's 1%. So you shouldn't be struggling with this. But it's good that you asked the question, Victor. That was a very important question in the beginning, for sure. Hey, Jason.
So Jason, one of our bank level traders, he says, currently in a rut. Trading ideas just don't seem to be working. This struggle will definitely come in cycles. There will always be a temptation to tweak. How to push through? Great question. We've all been in this rut. We've all been in this, and yeah, it does come in cycles. And usually this occurs after burnout, right? So you end up burning yourself out at times, and you're mentally fatigued. And when that happens, you don't see things clearly. You're not thinking clearly. And because you're so competitive, and because you're so competitive with yourself, you know what to expect from yourself. You're hard on yourself. So you beat yourself up a lot, right? And this is very, very common with traders who are disciplined. And I know, Jason, you're very, very disciplined, but at times we go through these cycles. You're right. So how to deal with a burnout? I would say focus on these 3 steps, right? You need to reset, you need to review, and you need to recalibrate. Okay, so reset is you need to do something physically, such as surrounding yourself by nature, hard physical activity, some sort of like HIIT workout, right? Something that's really going to push your body to failure, right? Just get it all out physically. Meditation, healthy eating, good rest. You might need a week to do all of this. Now, once you feel like you've reset, you're no longer sort of attached to all of this. Oh, I'm in a rut. Oh, I've got burnout. Oh, I really suck at trading. Or once that stuff is out of the mind and you're in the present moment, you're not really thinking about the past, you're not thinking about the future, you're in the present moment, then you're ready for review. So now you need to review your past performance, review what you've done good, review what you've done bad. Look at your best trades, right? Just look at them, look at the charts, look at the before and afters. And that's what you need to be looking out for, right? You need to visualize looking at your best setups in your mind. You need to visualize how you're going to execute that trade. You're going to visualize how you're going to respond and get ready for the next trade. So this is part of your review. Now your recalibrate is now when you're getting back into flow with the market. I would recommend starting on a demo account. So you're not trading to make money, you're trading to get into flow. So you're recalibrating back into and getting into sync with the market. So you're no longer under pressure to make money. You're just getting in sync with the market. And when you start seeing that consistency on the demo, obviously following your plan, your process and everything like that, then you just switch it. It's a smooth transition from demo to live. And then so right now what's happening is we have what's called you got momentum, right? So you were at like positive, so you were going this way, you go like positive momentum, and then burnout, you swing the other way. So now you got negative momentum, right? You're moving forward, but you've got drag. You're carrying an anchor up the mountain. Now you got to let go of that anchor, start again, and build positive momentum forward to then get back into flow, get into sync. So that's what I would recommend. Is those 3 steps: reset, review, recalibrate. It does wonders when you think of it like that. It's absolutely game changing. And then everyone listening, write that down: reset, review, recalibrate, and replay what I've just said, because I'll tell you what, it works. It works for me. It's worked for other traders. It's worked for my mentees. Diego knows about it as well.
100%. Yeah, it's so powerful. Remember, we're mind athletes. Everything's in the mind, and it's the same with an athlete. When you're training, you're lifting weights, so you're running. You need to sometimes take a step back because you can't keep that consistency realistically forever. It's impossible. I saw another question.
Actually, I don't have that much time left, Diego, and I've got to jump off.
Okay.
So what we'll do, look, if you're struggling with something, head over to the CTI Discord community and ask myself or Diego, tag us on Discord, and then we'll continue this conversation on Discord. And if enough of you come over, we'll do a live stream on the CTI Discord community on the CTI server, and we'll continue this type of conversation, because it looks like we're getting a lot of struggles, a lot of traders like wanting to some answers, wanting some help. And I love that because I've had mentors and they've reached their hand out to me and they've helped me when I needed it. So as a mentor myself now, I have the privilege to reach my hand out to you and help you. So that's what we're here for. We're here to help you guys. We're here to, look, we're not getting paid for this time, yet we're here giving you guys our experience, our wisdom, and this is our passion. And in fact, it actually makes us better traders. So I want to quickly go through indices before I go. I've got 5 more minutes because I can talk for hours if I keep going, man. So let's go into that. Let me go ahead and share my screen.
Just gonna post a Discord link, guys.
Yeah, if you could post the CTI
in the chat,
link, that'd be great. Awesome.
Yeah, and also while Rod gets his channel up, I'm just gonna answer a quick question. It'll be really quick. How to recognize the support and resistance levels that price will respect. In a nutshell, try not to set an order or trade the moment price is at that level. Wait for confirmation. Wait for a breaker structure on the lower time frames. Even if you use moving averages or something, wait for the moving averages to cross, for example. Don't just enter at the levels. Always wait for confirmation. So yeah, hopefully that answers it. Go on, Rod.
Thank you. All right. So from what I'm seeing, I am anticipating for indices to continue dropping. So I just want to have a quick summary of last week's, what we were looking at last week. So let's just go back in time to last week's stream. We were looking at this particular entry, which we executed with you guys. Where was it? This one down here, right there. Beautiful entry. We caught the low. Got the low of the week, as I was saying on the live stream, on Trading Nut live stream. And I I was targeting this imbalance up here, and also targeting this 100 daily moving average, right? You can see it here on the 15-minute time frame. So we're looking at NASDAQ on the 15-minute. So so I had a TP. Where was my TP? About TP1 was about here, and I wanted to turn this into a swing and TP approximately around this this imbalance. So very, very good, really good analysis, which ended up going higher throughout the week. Now, and then we had then we had CPI. So where we are now, let's have a look. Since then, we've had this ascending structure where we've had multiple breaks of structure to the downside, and now we're sitting at we're just taking out previous lows. Price is just continuing to tank and looking for and it just looks like it's going in one direction. It's very difficult to trade. So for me personally, I'm seeing the S&P 500 and I'm seeing the Dow. I'm seeing a bit more. I'm seeing these charts a little bit clearer. So what I would like to see ideally on the US 30, if we quickly go onto the daily time frame, there's a lot of liquidity down here, as you can see, with multiple daily lows, and price is just going in one direction. So I want to see these. I want to see price hit this multiple liquidity pool. Let's go down to the H4, and again you can see these equal lows a lot clearer, and we can see that the daily 100, which is this green, and the 200, the daily 200 are very, very close. So looks like we're getting a bit of a reversion towards those MAs. Now, if we go down to the lower time frames on M15, because I'm anticipating further downside, when the New York session opens in about 5 minutes, I want to see price come up to test yesterday's low. And I want to see some sort of breaker structure confirmation here to then take it towards this higher time frame imbalance. This is a 1 hour imbalance. So I'm seeing something very similar on the S&P 500. We've got this low. We've got this imbalance on. This is a H1 imbalance. And it's also in confluence with this daily 100 MA. So this is what I'm looking at. Let's zoom out onto the H4. And we can see that price is starting to come. Yeah, just making this a little bit more accurate. So prices are coming down to test this third tap of the trend line. And it's, as you can see, this 100 daily MA, you can see how often price bounces off it. I mean, it breaks past it, but then it reverts back to it. It breaks away, expansion away from it, reverts back to it. So there's always this reversion back to the 100. And that's what we're currently seeing now. So I'm expecting further downside on the S&P 500. If we go down to the 15-minute, very similar to the Dow. I would like to see a pullback, and I want to see my entry pattern around this area to then take it lower. So that's my analysis on the indices. I hope that's been valuable for you all. Diego, are you going to stick around, or are you going to jump off as well?
Yeah, I'm going to jump off as well.
Yeah. All right. Well, so yeah, Jason, you're very, very welcome. and you need to hear that again. That's cool. This has been recorded, so any of you that missed our feedback, we're talking about struggles, we're talking about solutions. You can always rewind, but before you do that, make sure you smash that like button for us, yeah. And if you also Diego does do another live stream this Friday on the CTI YouTube channel. So if you want to see Diego's analysis on Friday, then make sure you tune in. It's going to be 11 a.m. UK time this Friday and every Friday. So make sure you turn up for that.
Mm-hmm. Absolutely.
All right.
Okay, we can wrap things up. Dollars is going to the point of interest that we expected. So we've got to break out. We just need to have confirmation at plan A or plan B. So
Perfect.
Right, let's get into the zone. Thank you, Rod.
Yeah, New York session begins, guys. Good luck. Make sure you follow your trading plan. That's more important than impulsive entries. And I have gone through the US 30, my friend. So just rewind by 10 minutes and you'll see my analysis. All right. All right, Big T. Good luck, my friend. Bye, everyone.